90% of traders use the same patterns, and that is exactly why they lose money. Today in this video, I'm going to explain a crypto day trading strategy in the simplest way possible, straight to the point, without any fancy words and in minimal time. There are going to be 4 rules to follow, and it's important to go one by one, because if you miss one of them, the whole setup stops working. At the end, I will show you a real-life recorded example where everything comes together. So let's get started. Rule number 1. Select coins that have at least 100 million trading volume per day. First, go to Binance, select markets, and then choose futures. Here, sort the coins by volume so you can see exactly how much is being traded throughout the day. If you want to do it through TradingView, there is an indicator called Lazy Scalp board. You can see the trading volume there as well. Why do we choose 100 million? Let's see, for example, instrument Mega and compare it to Bitcoin. Absolutely zero liquidity, you can't properly trade this. Even if you find levels, they won't work because no one is trading it. The candlestick is off and you see almost zero orders coming from traders. It's very easy to manipulate this kind of market, and even if you enter a position, it will be hard to exit, even with a small amount of money. So remember, 100 million is a must. Rule number 2. Check the instruments with the biggest 24-hour change. These coins are in high priority because they are either pumping or actively moving. That means more traders are watching them and participating. More participants equals easier entries and better reactions. You can find them on Binance by clicking the 24-hour change tab. Rule number 3. Find a level with at least 2 or more equal highs or lows. This is the core of the strategy. As you know, highs and lows attract traders to play their stop losses behind these levels. The more times a level is touched and the higher the time frame, the more orders will be placed there, which leads to stronger reactions. Let's look at an example. On the 1-hour time frame, traders who want to short will place stop orders above those highs. There we have 3 equals highs. As soon as the price executes those orders, you can see a strong impulse up. Exactly what we are looking for. Of course, you can also use lower time frame, like 5 minutes or 15 minutes. Same idea. A clean level where stops are placed, followed by a strong impulse. What happens after that, continuation or reversal, depends on the market and the condition of it. But our goal is simple: catch the initial impulse. Rule number 4. Make sure on that level there is a big limit order. If you don't have one, don't worry, I will show you a free tool later. Most of the time when you find the correct level, you will also see a large limit order there. This confirms that traders are active at the level. If you are trading directly on an exchange, order books can be limited or hard to read, because the exchange tries to hide this information due to the huge advantage that traders could have when they are trading. When you identify these orders, you can either enter right after they get executed or just a little bit before them, because the reaction can happen very quickly. Now, when we combine all 4 rules together, let's look at the real trade I recorded live so you can clearly understand how it works. Starting from the beginning, the instrument had over 10 million in trading volume that day. It is in priority right now. We had a level with at least 2 touches, and the order book at exact level of 0.6, there was a limit order of 120k. As you can see, price slowly approaches the level, and I place a limit order to sell right after the break. As soon as the level breaks, we get a very fast reaction, around 1.5% in total. In these trades, your risk is minimal. If you identify the level correctly, the reaction is almost instant, so your stop loss can be very tight. As you can see, this strategy requires precise timing, which can be difficult when you're trading directly on an exchange. I use a free order book to read the market better. It helps me to enter more precisely and understand what is actually happening. The order book I use is called Scalp. It's completely free and you can connect it to most exchanges. To make it easier for you, I created a short course with 5 recorded lessons where I show how to install it, which settings you actually need, and how to connect everything properly. There are many things you can adjust, but I focus only on what really matters and share my exact setup. I also included 3 live trades recorded in real time, so you can see exactly how I use the order book to find these setups and what other trades you can take. As a bonus, you will get the most useful tools that I personally use every day. This will save you weeks of learning, so if you want to understand exactly how I use it, the link is in the description. Let me know in the comments if you have any questions, and I will see you in the next video.